It's that time of year again. Tax season has arrived in the US. And as you prepare to file your taxes, it's crucial to understand the tax implications of owning Bitcoin. In this video, we'll discuss some of the things that Bitcoin owners need to be aware of when it comes to Bitcoin and taxes, including its tax treatment according to the IRS, the difference between acquisitions and dispositions, and the tax rates that might apply to your Bitcoin gains or losses. One note before we get started, the educational content in this video is designed around the United States and is meant to help you start conversations with your own tax advisor. Whether you're in the US or abroad, nothing we cover here is catered to your specific circumstances. So please don't rely on this content as tax advice. Bitcoin is property. The first thing you need to know about Bitcoin taxes is that Bitcoin is treated as property for tax purposes in the US, not currency. This means that tax principles applicable to any normal property transaction also apply to Bitcoin. This definition was put out in the form of an IRS notice way back in 2014 and is based on the IRS's best understanding of current law. The next thing you need to understand is the difference between an acquisition and a disposition. Acquisitions are when you buy or otherwise acquire Bitcoin. The dispositions are when you sell or otherwise dispose of Bitcoin. As we'll discuss here, both can have tax consequences depending on your circumstances. Acquisitions. The most common of many acquisition types is a simple Bitcoin purchase, such as through an exchange or the Unchained trading desk. You may already know that buying Bitcoin in the United States is not itself a taxable event. However, the amount that you pay becomes what's called a tax basis. That's the baseline figure that will be used later if you sell or dispose of the Bitcoin. While a simple Bitcoin purchase is not a taxable event, there are types of acquisitions that can be. This can include receiving Bitcoin when someone buys something from you, getting paid for your work in Bitcoin, mining Bitcoin, or even receiving altcoins at the time of the network fork. In these cases, you usually have ordinary taxable income equal to the fair market value in US dollars of the Bitcoin received on the date it was received. That recognized ordinary income will become your tax basis going forward. Another type of acquisition is what's called a bona fide gift. A bona fide gift is one where there is true donative intent. The unique thing about Bitcoin gifts is that you'll have what's called a carryover basis, which means your tax basis is inherited from the gift giver. If you give Bitcoin as a gift, you'll need to tell them your tax basis. And if you receive Bitcoin as a gift, you'll want to ask about it. Bona fide gifts do not typically subject the recipient to income tax. However, the giver may have gift tax obligations depending on the size. Dispositions. For most Bitcoin holders, the tax implications of holding Bitcoin don't come at the time of acquisition, but at the time of disposition, or when you sell. With a classic sale for US dollars, the difference between the sales price and the cost basis, as described earlier, determines your capital gain or loss. The same goes for using Bitcoin as payment for goods and services. If you use Bitcoin to buy something, it's essentially treated as if it is a sale for US dollars, and the sale price is based on the fair market value of the goods or services you received. Another way you can dispose of your Bitcoin is to donate it to charity, and it's a great way to do it because there are many tax benefits. If you hold Bitcoin and the holding period on that Bitcoin is long-term, you get a tax deduction for the full market value of the Bitcoin when you donate it. In addition to the tax deduction, you don't have to recognize a capital gain or loss on the disposition. There are a couple of catches, however. The recipient has to be a 501c3 organization, and your donation must have a qualified appraisal over $5,000. Determining capital gain or loss for classic sales. If you sell Bitcoin at a loss, you can generally subtract that amount from other capital gains. And once losses exceed gains, you can trim up to $3,000 from regular income. If you're in the common category of acquiring some Bitcoin, holding it for a while, and then later selling it with US dollar gain, you'll generally need to pay capital gains tax. In order to determine how much you'll owe, you'll need to keep in mind your holding period. If you've held your Bitcoin less than a year, it's a short-term capital gain, meaning you'll be paying tax at the ordinary income rate. Your filing status and income will put you in one of 7 tax brackets. If you've held your Bitcoin for longer than a year, you'll pay tax at a long-term capital gain rate, which is a favorable rate. Depending on your other income, a long-term capital gain tax rate might be as low as 0%. If you live in the District of Columbia or one of the 41 states that currently impose state income tax, you may owe income taxes to your state or city in addition to those rates we just discussed. A common source of confusion when calculating capital gains is how to know which coins are which. Since Bitcoin is fungible, it can be difficult to know which tax basis and fair market value to compare against one another in order to calculate capital gains. The key thing to know here is that the default IRS rule is FIFO, or first in, first out. You'll compare the tax basis of the first coins you bought against the first coins you sold. Specific identification of specific coins, or UTXOs, is also allowed with proper documentation. Minimize future tax obligations with a Bitcoin IRA. If you're planning to hold Bitcoin for a long time, and you want to minimize your tax obligation, you may want to consider holding it in an IRA. The nice thing about holding Bitcoin in an IRA is that it makes all Bitcoin transactions non-taxable. You don't even have to worry about tracking your tax basis because your tax basis isn't relevant. If you choose to hold Bitcoin in a Roth IRA specifically, your coins can be free of tax forever, even if spent in retirement. To wrap things up, today we covered that Bitcoin is property for tax purposes. We also talked about the difference between acquisitions and dispositions when thinking about Bitcoin taxes, both of which can have tax consequences depending on your specific circumstances. For most common purchases and sales of Bitcoin, however, you'll need to file according to capital gain or loss as determined by your tax basis, the price at which you sold, the length of time that you held the Bitcoin, and your tax bracket. Finally, it's a good idea for everyone to consider the benefits of holding Bitcoin in an IRA, which can minimize your tax liability for retirement. Taxes can be complicated, and almost everything we talked about in this video has nuances and exceptions that we didn't have time to cover. For this reason, we strongly recommend consulting with a qualified tax professional to ensure that you're meeting all your tax obligations. That's it for today's video. If you have any questions about Bitcoin taxes that we didn't cover, let us know in the comment section below. And if this guide was helpful, please share it online, like and subscribe for more videos like this one. Thanks for watching, and we'll see you in the next video.